All right. We are welcoming back our good friend Tucker Maxwell to the podcast, one of the leading mortgage brokers here on the East Side. Been in the Pacific Northwest for how long?
Really, my whole life, if you count Idaho and Utah as part of the Northwest.
I'll give you Idaho.
Yeah, it's a
Yeah,
stretch.
yeah, Utah's a bit of a stretch, but
Yeah,
the same kind of vibe, right?
totally.
Mountains, a lot more sun in Utah.
Yep.
All right, so we're going to talk about the home loan process and knowing the process. So, since we kind of in our real talk segment, we kind of talk. Anything you want to add to what I said there?
No, I'll just echo your first comment about pre-qualification versus pre-approval. Really understanding the difference, and in our market, it really requires a full pre-approval to be able to make that strong offer. And what that allows us to do is to give the buyer concrete loan approximation so they know, can I escalate? Do I have enough funds to go above that list price? Or do I have enough funds to handle a low appraisal? Or whatever, whatever the offer goes into, we need to be prepared to make sure the buyer fits what we're going to offer. And so that pre-approval stage is very critical.
Yeah, yeah, it definitely is. And I mean, let's kind of go through the steps one by one. So,
Yep.
first step to buying a home is going to be what?
It should always start with the pre-approval process. So typically it starts by them calling you, hey Dan, we're ready to buy this house. I found this great home on the east side. We want to go tour it. And then you say, well, we have these really great partners and we need to get you pre-approved so we know that you can in fact buy that home before we go take a look at it. So the first step is typically connecting with a real estate agent and then getting introduced to a lender to start the pre-approval process. And so the first step is that pre-approval process, which is where we're collecting the demographic information, who you are, where you work, where you live, a brief history of the person, and the supporting documents. That's the key thing. The supporting documents that go with the answers. So pay stubs, tax returns, W-2s, anything that proves what we're telling the lender in the application.
Right. So, for instance, if I say I earn 7,500 a month, you want pay stubs that show 7,500 a month gross.
Exactly. And we also want to see that you have told the IRS that you make that amount and you paid taxes on that 7,500 a month income.
Right. Yeah. So it's that trust but verify.
Yep,
Trust
exactly.
but verify. Yeah. Excellent. So then after the pre-approval, what happens next?
Yeah, so once we issue the pre-approval letter, I like to consider that the ticket to the dance. That's really what gets you in, and that's where we pass the baton back to you, and you get to then start touring them and showing them homes, knowing the price point that they should be looking at. And that's really what makes that second step successful is doing the first step thoroughly and then saying, okay, Dan, these clients should be shopping between 800 and 925,000 to achieve their monthly payment goals and to stay within the amount that they have available for down payment. So that way you're not showing them a home at 1.1 million only to find out they don't qualify.
Right. That's pretty important because,
Yeah.
traffic kind of sucks. And if we go out looking at homes, yeah. All right. So that's the next step. So then how do I make an offer? How do I secure a property?
Yeah, so that's usually a team effort. The offer itself is written by the real estate agent, so that's something that you would help them with. Dan, is as you know, you're a professional at that. But in that offer, we have to disclose certain things to the seller in relation to the loan that you're obtaining. So we have to disclose: are we doing a conventional loan versus an FHA loan? Who do we need on this contract? Who's going to be on title? Who's going to be on the loan? Are all of those names included on the contract? So really, it's working as a team with the lender, with your real estate agent to formulate the offer plan and then putting it to paper using the MLS forms that we're required to use.
All right. So you've got an offer accepted. And actually, this is an interesting part. I would say that a lot of times, this is where we actually hand over, as agents, the majority of the work to the lender. Because, of course, I'll add a nuance. There's an inspection process that's agent related. There's also an inspection process that's bank related. So a lot of the work from our real estate agent standpoint is in the background now. I want to say we don't stop working. It's in the background, and then your team takes over. So when an offer is accepted, I will email you a copy of that contract. Then what happens?
Yep. And that's what we'd love to hear. Our job is to make it so that you can then step back and know that it's taken care of. And so from there, what we're doing is we're going back through kind of that underwriting process that we did at pre-approval to make sure everything stayed the same. Are you still at ABC company? Are you still earning $7,500 a month? So there's a quick search or quick underwriting process that we're going to do on that buyer. But outside of that, it is looking at the property. So is the property financeable? Do we have an appraisal at value? Meaning, does an appraiser, a third-party entity, value the property at the same value we're under contract at, or higher than that? Is what we're looking for. We're also working with the seller to clear the title. We want to make sure that when our buyer becomes the owner, that there's no existing liens, there's not a tax lien or a property tax or water bill or something that's still there that hasn't been handled at closing. And so we're ensuring that the title's clean, that we're now the owner of the property, or our buyer is, and that our loan is in first position with no other liens on it. And so after that offer is accepted, is that process that we're going through. We're coordinating with the appraiser, with title and escrow officers, and closing the transaction. And what we refer to that period is the escrow period. And that's typically anywhere from 2 weeks to 30, 45 days, where we're just checking everything off and making sure everything is good to go to transfer title from sellers to the buyers on the close date.
Yeah, and I'll interject, for a lot of people that we do this, Tucker and I do this on a regular basis, so we kind of know the rhythm. But as a buyer in this process, it may feel like nothing's happening, but like you said, clearing title, we have to actually, our team has to reach out to the seller's lender and get a payoff amount. They have to actually do a title search and then ensure that there haven't been any contractor liens, right? So if somebody got some work done on their house but didn't pay, there could be a lien. So we want to make sure all that's cleared off, so clear title is handed over. So, and that is a team process, including Tucker and Tucker's team, as well as our team as well. So what stage in this process does it require money to be paid to by the buyer?
Yeah, this is a great question I get oftentimes, is just preparing for buying a home, is like, when do I pay money out, and who do I pay, and what are the right times? So the first kind of answer is there's no cost for the pre-approval. That's really important to people to know, is to get yourself ready to buy. There should be zero expense. The lender should do that with no expense. They'll pull credit without a fee and so forth. They can always charge you for that credit report down the road. But basically, there's really 3 times that a buyer will pay money out of pocket. One you mentioned is the inspection, and that's something that they'll want to be prepared to pay for. They pay for that directly to the inspector, and the inspection fee varies, but that is an out-of-pocket expense that they will pay directly to the inspector, and that happens right after their offer is accepted. Or in our hot market right now, sometimes our buyers are doing an inspection even before their offer is accepted. So that's the first time that they're going to extend some money, and it could be anywhere from, what do you say, $350 to $550? Is that fair?
For an inspection, yeah.
Yeah. So that's the first time. The second time or stage that they need to be prepared to pay some money is earnest money. And earnest money is the good faith money that we give to the title and escrow team or the sellers, that is essentially strengthening the handshake of that offer. We're submitting a paper document that says we're good for this and we're going to buy this home. And then the earnest money is what strengthens that. And we say, we're going to extend a certain dollar amount to you to hold on to as collateral that we're actually going to close this transaction. So that's the second time, and they'll work with you to determine what is an appropriate earnest money deposit. Typically, it's around 1% to 3% of the sales price, but I've seen everything. I've seen earnest money as low as $1 all the way up to hundreds of thousands of dollars. And so it depends on where the home is and the interest level from other buyers and so forth. Yeah. And then that earnest money becomes the initial deposit towards what the buyer will actually bring in as down payment and closing costs to buy the home. And that right before closing, that final time, they'll wire bulk of their funds to title and escrow to buy the home. So those are the 3 times in a transaction where our buyers will need to be prepared to extend money to one party or another.
Yeah. So just to quickly summarize, in this order, generally, earnest money, about 1% to 3% of the purchase price, then about $300 to $400 to $500 for inspection. Appraisal, did you mention that?
Yeah, so depending on the lender and the situation, we may or may not invoice for that. It just depends. What we typically do is we collect a credit card authorization that says if you back out of this transaction, we'll charge you for the appraisal, but we include it as part of the final figure.
Yeah. And how much are appraisals?
It varies, but right around $900.
Okay. Appraisal. And then at closing, you're coming in with the remainder of your deposit plus any fees associated with the origination of the loan.
Exactly. Yep.
Yeah. All right. So how long does the process, and I think you alluded to this, once your offer is accepted, how long does that process take to close?
Yeah, typically it's a 30-day escrow period. I think that's the fairest kind of just ballpark figure, but we've closed transactions as little as 10 days, and we've had transactions on new constructions be out 6 months to a year. But on a typical resale, a home that was already occupied by another owner, it's 2 weeks to a month, basically, that we're going to close that transaction.
2 weeks to a month. And then when is somebody's first mortgage payment due?
Yeah, this is a great question as well, because you've just mentioned, they have to bring in that final deposit at closing. So we've most likely liquidated most of their funds, or for most of us. But really, it's going to be the first of the month following 30 days. So if we close today on July 26th, their first payment would be due September 1st. So a full month lag in most cases before that first payment is due. And the idea there is we want to give them an opportunity to kind of, put away a couple paychecks again before they're asked to make that mortgage payment.
Yeah, and if you were to time it and close, let's say August 3rd, then you're going not until, is it September?
October 1st.
Yeah, October 1st.
Yeah.
1st. Yeah.
And there is some, not to get into the weeds, but if we close in those first few days of the month, the buyer really gets a choice on whether or not they want to push out that payment to October 1st or have it be September 1st. Because as a lender, we collect days of interest. So no matter what day of the month we close, we have to collect the per diem amount of whatever the interest charge is per day for the remainder of that month. And so if we close on August 3rd, we have to collect from the 3rd to the 31st of days of interest, which could be a big number, right? It could be thousands of dollars. So
at closing, right.
Yeah,
so you're
exactly.
Technically still paying it.
Yep, exactly. So we can ask the buyer, do you want to bring in all of that interest and have your payment be October 1st? Or do you want to just bring in one day of interest, but now your payment is on September 1st?
Right.
So
and I would say
probably
most people would want to keep it that way.
Yeah, it just depends on the situation, is the payment, a stretch for them, or is cash to close tight? It just really depends on the buyer, but most of them do the interest credit and just make the payment on September 1st.
Awesome.
Yep.
Cool. So that's the process. Pre-approved, secure property, get the offer accepted, get your appraisal ordered. Your bulk of the money's coming at down payment at closing, which is when you're going to sign all the documents to secure everything. And then the first payment is about 30 days later, depending on how you set it up. So awesome. I love that. Hopefully people will have this video available to them to kind of look through the loan process. And if you have any questions about the loan process, you can reach Tucker by calling him at 425-757-9202. He's very responsive. I think you've got one of our clients right now pre-approved. That was about a day and a half that it took you. And I wouldn't have him on the show if he wasn't a solid, upstanding guy who knows what he's doing. So thank you, Tucker, for all your input. I appreciate that. Before we go, we are looking for local businesses that want to share their services to the people that are moving and working and living on the East Side. This last weekend was even bigger than I expected. I forgot Taylor Swift was in town. Neither one of us mentioned that going on. We were more about the Capitol Hill block party, and I heard the Bite of Seattle was also last week.
Exactly, and the Mariners were in town. It was quite the weekend.
It was quite the weekend. If you were in town and you did not enjoy Seattle, there's something wrong with you. Or like me, I was on the east side of the mountains rafting down a river, having a good time. So,
Dan, I was with you. I was also on the east side of the mountains.
All right. Well, thanks for watching the show. Anytime. I guess this is the show dedicated to living, working, and playing on the East Side. We thank you for watching.
Thanks, Dan.